Let's kick off with giving the introduction of our guest for today. We are very honored and we're very pleased to have with us Kuorkor Dzani, COO of Fluna. Fluna is an organization passionate about unlocking global trade for African exporters using market intelligence and trade finance. Kuorkor is the chief operating officer. She spent over a decade building a lending business in Ghana. She has in-depth experience ensuring operational efficiency and instituting risk management measures. Kuorkor, we're very, very pleased to have you today with us. Thanks so much for your time in advance as well for sharing all the knowledge that you're going to be sharing, talking about trade finance and what's Fluna's offering. With no further ado, my dear Kuorkor, I pass you the floor. Thanks so much.
Okay. Thank you so much. And it's a pleasure to have this opportunity to speak to all the participants. And I just want to thank SheTrades and the ITC for the opportunity. I think it's a great way to let people get to know more and also to introduce funders to the businesses. So today we'll be having a conversation about how to access trade finance for your export business. We can move. Yes. So just to give an idea of the agenda, we'll talk about who we are as Fluna, introduce you to trade finance, best practices for funders, for working with funders, and how we, Fluna, can help you. And then there'll be the Q&A. I'm aware that there are various levels of people in this call. There are some who are very experienced, and there are some who are just now getting into the export and trade finance space. So I'll try to cover the whole range, and you can just save your questions till the end or just type them up and then we'll address some of them. I'm sure that I will answer some of the questions as we continue. Thank you. So who are we? Fluna is a fintech, and we've been in operations for about 2 years, and we have a team that has vast experience all across Africa, in the US, in the UK, and we basically came together to set up this company to assist SMEs to access funding and financing and basically to support global trade from Africa. It says here that we've deployed over 20 million in the past 2 years, and we really are interested in connecting with fast-growing, excited entrepreneurs who are really interested in moving their businesses forward. So trade finance. Trade finance, as we know, is just the financing of goods and services in a trade or transaction from a supplier through to the end buyer. So once you have any goods or services that you're supplying to someone else, then you are engaging in trade finance. The moment you begin to do it outside of the borders of your country, then it goes into the range of international trade. And as you stated here, it's a $3 trillion business in the world. And so the goal is for us to ensure that Africa can get a big piece of that pie. So some of the challenges that exporters may face, and I'm sure that for those who have a lot of experience with trade finance or just in terms of growing their businesses, they've experienced this. And this is not unique to any particular country in Africa. Unfortunately, these are just the challenges. Lack of liquidity is a big challenge, especially these days. Unpredictable cash flow, long credit decision timeline, meaning when you go to your bankers and you want to actually get a loan, it can take anywhere between 3 to 6 months to even get a response on your credit request. And so that is not necessarily the best if you want to grow your business. Access to foreign exchange can also be very tricky. We are all an African country, so we know how sometimes, depending on what's going on in the macroeconomic arena, it just affects us. And then low working capital. Sometimes your business is growing and you just need a little bit of working capital to grease the wheels and to help you to be able to fulfill orders, to grow, to expand, and that's a challenge. And then also when you want to get loans from banks or financial institutions, you are sometimes burdened with the high collateral requirements. And most of the times, we empathize with the banks. It's not their fault. It really is a function of the regulations and the requirements that they are given. So there are a number of types of trade finance, and this is just to give an idea. There's one that can be buyer-led. The buyer sets is where you have trade credits, and then you can get advanced cash advances as well. So you hear terms where someone says, oh, my buyer decided to give me 20% advance. So that's from the buyer-led side. And the more common, or the one that people tend to have experience with, is the exporter-led one, where you would be the one, you as the exporter would source some financing to be able to support you. So we have purchase order finance, freight financing, receivables discounting, and term loans. Again, this is not an exhaustive list. This is just to give an idea of what tend to be the most common types. Okay, so for purchase order financing, again, I do apologize for those who are well-versed, but this is just to make sure we're all on the same page, just high level. Purchase order financing allows you to unlock capital pre-shipment. So this is essentially you getting funds to enable you to procure the goods, prepare the goods, whatever processing needs to happen in order to export to meet the demands of your buyer. So it requires the validation that the exporter, that you can demonstrate that you can execute these transactions. You must be able to have a purchase order that proves the product specifications, pricing, rejection terms, just basically proving that you do have an order. And then it's not the best for first-time exporters because you need a track record. And it's considered high risk because when we lend to you, or when an entity lends to you for PO financing, that means they're giving you the funds to actually prepare the goods in order to export. So this is just a little diagram. I will just run through it quickly. Again, if you have a PO that has been purchased, that's a purchase order from a Dutch buyer to a Ghanaian supplier, for example. They are buying pineapples. What the pineapple exporter would do is he would approach a lender. The lender would give him a portion of the funds. That the lender would disburse 200,000 USD. This is just an example to help him procure the pineapples to export. Once the pineapples are gotten and they are sent to the buyer in the Netherlands, the payment for the pineapples, instead of going directly to the exporter in Ghana, would come to the lender. The lender will take out the difference, that is the interest charges, and then the profit will be returned or remitted back to the exporter in Ghana. So this is just in a very simplified form what purchase order financing can look like. We also have the freight financing. Now with freight, that means that you have the goods, you don't have a challenge with the processing or the procurement of the goods, but you just need some help with the financing of the transportation. I know that for countries that are especially landlocked, I mean, Kenya, Uganda, some of these things tend to be quite high. And so when freight financing is a product they can actually benefit from. Again, for you to access freight financing, you should have commodities that are, you tend to have commodities that are low in value, but the freight costs are expensive. So a financier can come in and support. You need to have the purchase order with CIF terms from the buyers. That means that they will require freight payments upfront. And then also flexible and adjustable financing structures in line with the trade sizing and cycle. There are some exporters who are doing air freights that would be very different from those that are doing by sea and those that have to transport by land. Again, a very simplified view of what freight financing looks like. So the goods that are supposed to be exported will be sent to the buyer. And once we will give the funds for the buyer to actually be able to, for the exporter to be able to ship the goods or to send the goods by freight. Once the goods are delivered, the buyer pays us, the lender, for the goods, and then the profit is in turn given back to the exporter. So it's just a cycle. Again, once you follow the numbers and you follow the lines, it just helps you to see the flow. And then the last one that we'll talk about is invoice discounting. Now, many people are familiar with invoice discounting, but I think few people access it. Now, it can be quite a powerful tool, especially for local purchase orders. But essentially, you would go ahead and you will invoice for goods that have been delivered. And once you invoice for the goods that have been delivered, you want to have access to the funds ahead of time. So if your buyer basically says, oh, I'll pay you in 30 days, in 15 days, but you want to unlock your cash so in order to continue running your cycles, in order to continue exporting or running your business, then you can approach a financier and a financier will give you some of that money in advance. So the risk is assessed based on your buyer's capability to pay the invoice. So again, it's not the exporter because you have already done the export. So the risk is really about the buyer and the buyer's strength and ability to pay. So the buyer has to have a track record, meaning you should have been exporting to that buyer and they have been paying you so that we can see that if the buyer says they're going to pay in 1 week, they pay in 1 week. If they say they're going to pay in 30 days, they pay in 30 days, plus or minus a few days. Again, this is considered quite low risk because there's no performance that is desired on your part as the exporter. It's really about the payments. And you can unlock up to 80% invoice value. And yes, it's something that I believe people should look more into because it can be quite useful for you if you have long payment terms from your buyers. Again, a very simplified view of it. So the exporter, that is you, the business person, has already gone ahead to supply the goods. Once you supply the goods, you want to truncate the time that you would take for you to get payment. So once you approach a lender, the lender would basically give you, you would assign the full value of the goods to the lender. The lender will give you a portion of that, and then there will be fees that will be deducted. So at whatever time that the buyer would essentially pay for the goods, then you'd be given the difference, if there is any. But mostly you'd have gotten most of the money upfront already so that you can continue running your business. Okay, so best practices for working with funders. We all know everyone wants to understand how do you attract funders? How are you able to position yourself to be able to work with funders? And I would say that in our engagement and our experience over the years, it's just a few things. One, for a funder, we need to know that you are a structured and reliable partner. If you're working with a funder that doesn't see you as a partner, then this doesn't apply. But if it's a partner and they want to grow with you and they intend to grow with you, then you need to make sure that you are structured and you are reliable, meaning when they ask for documents, oh, that goes into the next point. When they ask for documents, you are ready to share them, they're available, your books are in order. There shouldn't be any attempt to conceal information. There should be an openness that suggests that you are indeed being transparent with your funder because they are giving you money in advance. Okay, so look for funders that understand your business. I know that sometimes you might look at interest rates, you might look at pricing, you might look at speed and other things. But I think most importantly, you need to have a funder who understands your business. If you are having interactions with a funder, a financier who doesn't understand that you need your funds to come quickly because you're in the trade business, then there's a mismatch. And no matter how low the interest rate is, no matter how convenient or whatever perks there are, whatever relationship is there, their funding is never going to be a good match for your business if you want your business to grow. And then we say the promise of cheap capital is not the same as capital in hand. We all know that sometimes you can meet funders who say, oh, I'll give you this funds at this percentage, this is low rate, it's cheap. But the reality is, are they able to give it to you within the time that you require it? Sometimes you can be chasing that cheap or lower interest rate or zero fees for months on end at the expense of your business. And then we say be transparent and open about risk. We understand that lending is a risky business. So if you are a partner to your funders, if you see them as partners, then you will continue to ensure that if there's a challenge, whether it has to do with any changes in regulation in the country, any challenges they're experiencing, even with the operations, just be transparent so that they understand and they can make adjustments as you go along. Try to get a no as fast as possible. We all know that business is one of speed. Money is time, time is money. So instead of waiting for 3 months, for 6 months to get a no from your funders or from your financiers, lenders, get a no as soon as possible. So I believe everyone should have, as a business entity, a number of options. You should have a variety and a suite of funders that you go to. You know that when you need working capital, this is the person you go to because they understand your business, they can provide it at this rate. You know that when you want to buy or you want to purchase equipment, you go to this person. When you want purchase order financing, you go to this person. At the end of the day, you need the sort of financing that works for your business. And then I will say that you ask questions when you don't know. I think it's strange that people will want to enter into a relationship that is a lending relationship without understanding things fully. It is your right. You are working. It is your business. So just as we don't know your business fully, you are not expected to know our business fully. So the key for you is to ask, openly, candidly, and seek that clarity so that you know what you're signing, you understand what your assets we're committing to, and when the challenges appear, you can keep us abreast and the communication will flow. So essentially, in a nutshell, not all funding is equal, and you should seek out the best funding that suits you. So a little bit more about Fluna. I think I mentioned this earlier. Our focus is really financing, empowering exporters and high growth SMEs across Africa. And so we've been doing this for a number of years, well, for 2 years now, and we are backed by venture capitalists and we are backed by big funds and family offices. If you can go to the next. So we've deployed about 20 million across Africa, and we are currently in Ghana, Nigeria, Kenya, Tanzania, Rwanda, Uganda, Cote d'Ivoire, and we are seeking other markets. As you can see from the map of Africa, there's quite a lot that we haven't touched, so we're very curious. Next, okay. So all of the options that I talked about, of all the funding opportunities out there, we provide purchase order financing, invoice discounting, freight financing, and working capital. These are the specific things that we as Fluna are able to provide. Why would you want to partner with Fluna? Why would you want to take loans or financing from Fluna? So we provide easy access to our starting point is 30,000 USD, and we are able to scale up to $1 million. There's an example of an exporter out of Ghana whom we started financing, who we started financing at about 100,000 USD, and currently we are doing close to $500,000 with him. It's a matter and a function of the fact that we're able to scale as his business grows. Quick decision. We let you know once you submitted all your documents within 72 hours, whether it's a yes or a no, or if there's further information that we require. We don't waste your time. We also make sure that we match the duration of the loan with your cash cycle, meaning if you expect to be paid in 6 months and our funding is for 3 months, then there's a mismatch, and it wouldn't be prudent of us to even consider lending to you. So we'll make sure it matches. We also have principal repayments at the end of the loan. So that way, for exporters specifically, you can actually not be burdened with the interest payments, but once you have the full refund or the full payment of your goods, then that can come to offset the loan. And the interest rates are priced based on risk. So we look at your margins, we look at the profitability, and if we don't see that it makes sense in terms of the cost, we will not go ahead. But we basically adjust the pricing based on risk. And so if you've been with us for a while, it continues to go up. Or it continues to go down, that is the interest rate, because there will be benefits, the risk is reduced, yes. Overall, our goal is to help you improve your cash flow management and reduce the risk in exports. If you have a partner like Fluna, as you get purchase orders, as you're growing, you know you can depend on us to be able to scale, to be able to meet your orders, and just to grow your business. Okay. We are sector agnostic, but we are looking for exporters who have proven track records. And these are just a few examples. We are in the fresh herb business. We have dried spices, fresh fruits. These are just a few of the things that we have financed in the past. And we are very eager to learn about other sectors. And so as much as possible, whenever someone has an interest or an inquiry, we are willing to look at it, understand the industry, understand your numbers, and see where the opportunity is. Okay, so I'm sure there are a bunch of questions going on as to how to apply. We are a financial institution, so there's some very basic things that we require. We would need to know that you're a registered company, so your company documents, incorporation, KYC of the directors, export license. So those, I think, are basic when you're opening even a general bank account anywhere. So we would need that. And then we want to understand the health of the business. So that's where we ask for the bank statements. Last 12 months, last 24 months, depending on how activity has been. Management accounts. Management accounts gives us a view as to how you are actually running your business on a monthly basis. And then we require a minimal annual turnover of 200,000 USD. Depending on the transaction, depending on the company, we are willing to, look past the 200,000. It's not set in stone, but it helps to give a good idea, because if you're doing 200,000 minimum turnover, that means that you have a number of things in place. You are on the growth path, and essentially you are looking to grow your business. Track record is important. I didn't mention earlier, but I will mention it now. Track record is very important because that shows that you are able to execute, that shows that you're operationally competent, and that shows that you have a relationship with your buyer. If we are going to finance you to basically export to your buyer should also be credible. But how can we confirm that? It's based on just your history with the buyer. So if you've been trading with the buyer for 2 or 3 times, that's enough evidence. And we prove this by invoices, POs, bills of lading. And then finally, transactions. So transaction cycles of less than 90 days, minimum net margins of about 6%, just so that there's enough room, there's enough cushion so that we can weather any challenges, any delays. So pretty straightforward if you ask me. Okay. The application, as I said, is very transparent and simple. It's an online process. Once you look through your operations and identify the specific transaction that you want to finance, you have your purchase order, you log onto our website, there's a platform, you register, you begin the KYC process. And once you have your documents with you on your laptop, you just upload everything. It's all online, very simple process. Once you apply online, we will have a call with you. We'll reach out to you, have a call to seek clarity, and then we begin the due diligence process. That can take anywhere between a week and 2 weeks, all depending on how quickly you provide information. And just to give an idea, some things we do during the due diligence is we reach out to credit bureaus, we get that check, we confirm some of the information that you provide to us. We also sort of engage and see whether indeed the information that you provided matches up with what we know exists in the industry. So you can't say to us that you're exporting avocados at a time when avocado is not being exported. So things like that, we make sure that everything is accurate. And once we have that process, we have all the documents, we give you a decision in 72 hours and a proposal. So it's a term sheet, it gives you an idea of what we are offering, and we begin discussing. Once you agree, honestly, it's really a very quick process to disbursement, and we lend in USD. So we would have to go about testing your bank accounts, going through that, I would say more legal process, filling all the contracts, signing everything. And it's a fairly swift process from there. Okay. So these are just a few testimonials from clients that we've worked with. I don't know I think we have some people from Kenya. Yes. So this is a client of ours, Mwangi Muturi Lusoi Greens. He does fresh herbs out of Kenya to the UK. And we also have Namaka Ofili from Nigeria. She is a hibiscus trader, doing quite well. And then in Ghana, we have Complete Farmer. He's an aggregator. So they aggregate a variety of produce from chili to sweet potato to soya bean, just a variety of products to various markets. This will all be available in the slides in the recording, so you can read it. So as I said, the application process is very simple. You log onto our website right now and www.fluna.co. There's a registration process. Once you register, it's a platform and you will see an option to apply for purchase order financing. Once you begin the application process, someone from our business team will reach out to you and we can begin the conversation. And on that note, I believe we are done.
Thank you so much, Kuorkor, for this
Thank
amazing
you.
presentations. You cover such a wide range of topics, everything covering from trade finance. Very good overview to everything that Fluna is offering. So thanks so
Yes,
much.
thank you.
Before moving on to the Q&A sessions, because I do see some hands up and a lot of questions going on through the chat that actually are being tackled by Olu. Thanks, Olu, as
Oh,
well.
excellent. Thank you, Olu. Oh, good, because I
Thank you,
saw
Olu.
messages coming up.
Yeah, I see that all those being tackling most, but I see raised hands, and I'll pass it over to you for those that
Okay.
have raised hands. Not before just quickly sharing what's coming next on the project. As we mentioned, we have this e-coffee sessions. We keep inviting different types of capital providers offering different types of financial instruments. And we have on a coming in 2 weeks, a fintech company sharing information about they offer the loans that they offer through through financial technology. This is based in Nigeria. So all of you that are based in Nigeria, interested in loans using fintech, please have a look at our page and don't forget to register. Um, as mentioned as well at the beginning, all capital providers that are presenting today, such as Fluna, is already registered on the SheTrades Invest tool, and you are also able to connect with them directly through our platform. So do register, so you can also have their contacts, more information, as well to access to these webinars. Coming up as well, we have an e-learning course that is called Raising Funds for Your Business. It's going to start on May 15. It's a course giving participants an overview of the processes involved in various different types of funds. What's equity, what's a grant, um, what is trade finance, what is it for, what is the best that should match my business, how do I understand my financial needs, how do I choose the right type of finance for my business needs, as well touching upon post financing phase. So it's a very comprehensive online course that we really invite you to join. It's free of charge. It's open for 2 weeks, starting on May 15, less than 4 hours of study. And at the end, if you finish all the course, you get a certification by the United Nations. So really recommendable for those that are looking to find a little bit more about different types of raisings and raising funds for your business. Um, with no further ado as well, I'll passing you again. I think I already shared the link for
Yeah.
SheTrades Invest where you can register, but you can use right now your phone to scan this QR code that it's in front of your page, so you can actually have a direct access to it and register for it. And with no further ado, then we pass to the questions. And I can see Khadijatu has her hands up. Khadijatu, I pass. Feel free to unmute yourself, please.
Hello.
Okay.
Sorry,
Yes, we
that
can
was a
hear you.
mistake. Yeah, I'm sorry. I didn't raise my hands. I think I mistakenly pressed the button. I'm just going to leave for the next one. Thank you.
No worries. Godfrey.
Oh, thank you very much for the wonderful presentation. This is really interesting, and I would really love, first of all, to participate in the training you have talked about. My question is, you are looking at several products, and you have not mentioned about coffee, and the coffee is the main product for Uganda. That's what we export. So I don't know whether you really have interest in coffee, or you have funded some of the coffee exporting companies or produce organizations in Uganda. Secondly, in Uganda, we have, for example, you have SMEs. They all have different dynamics on how they run a business. Do you take an extra mile to analyze or assess the operation of these entities, how different they are, so that a producer organization which may be having the drug may having limited capital, for example, but may be well positioned to run its business well and then be able to pay. Yet a company may be having a lot of cash and may need some liquidity to proceed, but the operations may not be their systems may not be right. So do you take an extra mile to assess the nature of the organization that you can at least support them all? Thank you.
Okay. Thank you very much for your question. So the very first one, yes, and a big yes. We actually, not only do we finance coffee export, but we actually have some clients who are in the business as we speak. And so, yes, feel free to reach out to us. We are particularly interested in coffee because we have some experience in it. And to your second question about the companies, whether we take the time to understand the operational competencies of a company, we do take the time, which is why once you mention coffee, because we have experience with some coffee businesses, when you come to us, the questions that we ask in our deep dive sessions and the sort of the research that we will do will help us to appreciate the nuances of your business, because no two companies are the same. And so long as you are running your business well, and we see that from your turnover, we see that from your bank statements, we see that from the growth of the business, we are willing to have a conversation. You talked about the differences between producer organizations and those that are just aggregators. Yes, we are aware of that. If you're an aggregator, your overheads are less, some of the challenges that you face are less versus one that's a producer. So if a producer company or organization has purchase orders, has been trading, we are definitely open to speaking to them. In Ghana, a lot of the pineapple farmers that we finance are not just exporters, but they produce and export. So they're producer exporters. And we know that the challenges are slightly different when you are dealing with a producer. I hope that answers your question.
I think it does, and then for the purpose of time, we can pass
Yeah,
over.
you
Okay.
What about
Hello, I think your line is breaking.
okay. My last question is normally the existing trade finance have been considering contract financing as one of the options, especially for certified organizations in Uganda. Do you also consider such avenue of financing a company based on the contract they have signed with the buyer, for example? Over to you. Thank you. That's
Okay, you broke a little bit. I believe what you were asking is if we consider the contracts that have been signed with the buyer. Yes, we look at the contracts because that has the overall terms. But remember that you can have a contract and you don't have active purchase orders. So a contract is good, it's essential, but the contract has to be supported with the purchase orders, which shows the track record, which shows that you have actively been engaging the buyer. Okay, I think we can take some others. We have about three others.
We can pass to Shakirat.
Okay.
Okay, thank you very much. I have two questions. Number one is, do you do trade papers? For instance, I have a bank offer to fund a business locally, and that requires a bank guarantee. That's my first question. Number two is, you mentioned that you do your funding in dollars. Yes. I've had experience of companies taking, because of course our currency in Africa majorly, especially with focus on Nigeria, fluctuates a lot. I do know of a company that went under because they took a foreign loan at when dollar was 150 naira, and suddenly it went to 350 within the period of the contract. So do you provide edge option such that one is protected? If you do, please do explain how you go about it.
Okay.
Thank you.
Thank you. So in terms of bank guarantees, no, we are focused on short-term financing and on trade. So the bank guarantee is an area that we don't get into. To your question about the banking, about hedging, about currency, the currency risk. So ideally, we finance people who are actually getting paid in foreign currency as well. So when we deal with exports, once you are exporting, I don't know what you export, Shikra. Let's say you're exporting shea butter.
I export briquettes.
Briquettes, wonderful. So once you're exporting briquettes, you are exporting it and you're earning dollar. So if you're earning dollar, there's a natural hedge there to begin with. Now, remember that it's export. So once it's export, it's a relatively short period of time. So you are not looking at something over 6 months. You're looking over 3 months because it takes 3 months to process, 3 months to send it over, and then to be paid. So we look at those sort of time ranges. And then finally, I would say that we have several solutions in-house that help to mitigate some of the risks there. And those are things that, I mean, I think you can actually, it would be great if you could drop your email to my colleague, Olu, we could reach out to you, because there are things that we have, solutions specifically for Nigeria, that can help you to actually position the business well. And I think I mentioned margins. If we look at your margins should be healthy enough to hedge. You are in briquettes, so you really don't have an issue in the sense that you are, whatever you produce it at, you have fixed your rates in USD, your buyer buys it, and once they buy it, they are paying you still in USD, not in Naira. So overall, you are naturally protected.
Okay, so I've just dropped my email address with the host. So I do hope that you get it from the host.
Okay, my colleagues will pick it up. Thank you, SheTrades.
Thanks, Kuorkor. We have another hands up. Before this, I'm gonna also at the same time launch a poll. Please, it's gonna show right now in front of your screens. So this is a little bit for us to evaluate this webinars and past webinars. So while we keep answering questions, please feel free to start answering the poll. I will truly appreciate this. And we pass it over. I see another hand from Pulan.
Good afternoon, and thank you for the opportunity. Firstly, let me just apologize. I joined in a bit late. I was having network problems in terms of connecting. So I just want to find out, I've got two questions, but let me start with this one that will lead me to the second one if it's relevant. I just want to find out, what is this funding all about? I hear most of the participants are talking about edibles. Is it only on edibles?
No, okay, let me jump in. No, it's not. We finance, I think someone mentioned briquettes right now, and I told her that we'd be very interested. We also finance from out of Mauritania, lead ingots. So it's a variety of things. Once you're doing exports, once you are earning hard currency USD, once you're in that trade space, we are definitely open to speaking with you.
Okay. And
charcoal is the thing that moves. There are charcoal in different countries. So it's a variety. So don't be restricted.
Oh, okay. And then one thing that I kept on hearing you say is you fund people who have purchase orders. Is that you are only limited to that?
So I think something that didn't come across too clearly now that I reflect on it is that our lending is unsecured. So our loans, we don't require you to bring in landed property. We don't require you to bring a bank guarantee. We don't require you to bring your house or cash collateral. So that means we are relying on the strength of your transaction and of your business. So when you have a purchase order, what it means is that you have your buyer, if I can put it that way, has been dealing with you, and there's that trust. It also means that there's the relationship that we can rely on. It also means that you have demonstrated the ability and the capacity to execute, which is what we are looking at.
Okay.
And the way that we get around not having to take your security is that you assign the receivables to us. And so I think the example that I gave, you want 200,000 for a 300,000 order. So we give you that 200,000 ahead. You get everything ready, you export, and then when your buyer pays, they pay us the 300,000. We give you back we take out our interest, take out the principal, and the profits. That difference is what we remit to you. So to a certain extent, you are able to do much more, and it costs you less. So what some people do is, as I mentioned earlier, you have a suite of financing. So depending on the sort of purchase order that you have, you come to us. If you don't have a purchase order, then it presupposes that A, you are not experienced in the commodity or the goods you're talking about. B, you don't have track record with a buyer who has been known to be reliable to pay. Because you can have problems with buyers as well, where the buyer essentially, you supply them and they don't pay. So we need to be able to mitigate and balance out that risk. I don't know if you sort of understand.
Yes, no, I'm answered. Thank you very much.
Okay, thank you.
Okay.
Thank you for the question.
Thanks, Bulan, and thanks, Kuorkor. For those of you who haven't seen the poll, please, just a friendly reminder, it will disappear after you answer it. There's a question coming through the chat box. It's from Sylvia. Sylvia is asking, what collateral do you rely on?
So I think I just talked about it. We do not take on traditional collateral because we sit on the receivable. So we don't ask you for your house. We don't ask you for a vehicle. We don't ask you for cash collateral. We don't do those, which is why we, if I can say, it enables us to be able to finance companies that want to grow, because you will admit, as a business, there are certain limits to how much collateral you can have. And if you're not careful, collateral will be a constraint and prevent you from accessing more money. But with Fluna, if you have a purchase order that is for 100,000, 200,000, 300,000 USD, you can grow because it is not dependent on the value of the house or the property that you have, which is what tends to happen with most financial institutions.
Thank you. Let me see if there's any other questions here. Does Victoria asking about interest rate? Not sure if there's a range or.
Yes, there is a range, but as I said, it's based on the risk depending on your transaction and what basically you're dealing with, the goods and your business operations. So we give loans on a monthly basis. So it ranges between 2.5%, 3% to about 5 or 6% on the very high side per month. So remember that we do short-term loans. So you have to think of us in terms of transactions and purchase orders where there are high margins, where you need to move quickly and where there's a quick turnaround, which is why we don't do things like capital expenses. So we wouldn't finance purchase of trucks, we wouldn't finance equipment, no, because you need to be able to convert quickly.
Thanks, Kuorkor. I don't see any other. I think Pulan, is this Pulan? I see your hands up.
Yes, just one last question. Sorry, I forgot to introduce myself. I'm actually from South Africa. Nice. Then one last question is, what happens if I do get the short-term loan and you experience, okay, maybe I experience challenges in terms of the payment from whoever I rendered the service to. What then how do you mitigate the situation?
Okay, so may I ask what you export? What do you deal in?
I'm dealing with cleaning detergents and sanitary towels.
Okay, so you have buyers who you have a track record and experience with. That's one of the ways that we check. So we wouldn't look at you if you have a transaction or a purchase order from someone you've never dealt with, because as we said earlier, your buyers can also have financial challenges. So we basically do a buyer check. We do a buyer check based on your experience with them, and then we also check, and if in some instances we're even able to check their financials to see their strength and their health. So that serves as one. Now, if you happen to have supplied them with the goods and they haven't been able to pay, based on your contract, you have recourse to them. So what will probably happen is even if Fluna was not in the picture, you would take them on legally, and you would take them on legally based on the terms of your agreements with them. So what we would do is we would provide you with supporting evidence to be able to, as it were, continue to pursue them. But that obligation is still going to be active.
Okay. All right. No, thank you.
There are some instances where we might end up going into things where there might be a tripartite agreement, but those are rare, and those are things that do not necessarily, those are nuances that might come up. In that instance, then Fluna has the, if I can put it, the locus or the power to pursue them. But other than that, because you are the primary obligor and the relationship they have is with you, it is out of the ordinary for us to step in.
Hello. Can I
Hello?
Elizabeth would like to talk.
Hi, Elizabeth, we hear you, but there was another.
Yeah,
if we can pass to Effa first, and then we pass the The floor to you, Elizabeth. Thanks.
Thank you so much for this webinar. It's quite enlightening, and we are happy to know organization out there that is looking towards funding export. My name is Efe Hussein. I'm the president of the Women in Export. We started this group for women in Nigeria this year, January, and we are working towards establishing some good contacts for distribution of our products outside Nigeria, of course, in the US, in Europe. We have some distributors that we're working with, trying to establish markets for our women. Now, I know that we're just starting, and most of our members will not qualify for the type of facility you offer, but I just like you to know that there is a group like that existing, coming up. We're training women. We are doing what we can to empower women in their little ways, to groom them and prepare them to be able to latch onto opportunities like this. You know, women are very important in the agricultural supply chain, and we want to be deliberate about bringing them up to be able to compete in the export space internationally, like every other SME should. We currently have some orders. Again, we may not qualify based on the criteria you had given, but we are working to ensure that we are able to pull them through. And in another 6 months, 8 months, or 1 year, we will be able to reach out to you to say, hey, we have done this, and we think it's time that we can deal with you. So we just want to let you know that we exist, and then we're working to see what we can do to build ourselves to the point where we can relate with you.
Thank you so much, Efe. And I commend you for what you're doing. It is essential. I must say that, and don't tell the men, when we lend to women-led businesses, women-run businesses, they are more meticulous. They are more focused on actually growing the business. They are not, and you know, we actually like working with women quite a bit. So what I will say, Efe, is if you can actually drop your email into the chat so that my colleague can pick it up, because we would love to have, whether it is a training for the women, whether it is some sort of engagement. And just to mention, I encourage everyone who's on this call, even if you think you don't qualify for our loans, to register on our platform, because we have a trade directory and a market linkages and a matching product that we are actually pushing out now. It's in the early stages, but what we're doing is we're trying to put on there, or trying to get on there, suppliers and then also buyers, so that you are able to come on there and you know that there are pre-vetted buyers there, and you yourselves have done some pre-screening, so you're also pre-vetted. And it's just a great way to encourage that partnership and that sort of participation and collaboration across board. So thank you so much, Efe. And please reach out to us. I would love to. My colleague Olu is in Nigeria, so we would definitely like to engage. And as I said, even if it's a webinar, and I encourage all the other groups as well, if you have a group, don't say that, oh, you're not there yet. There are things that you might be able to, we can work on. And also, if it isn't necessarily about financing, there are other solutions that we have on our platform specifically for trade. So I think you'd find that quite useful.
And Efe, if I may jump in as well here for the SheTrades, please also do write to us as well. It's really amazing what you're doing. We really want to keep supporting all this type of initiative. So please also do run an email to us. We will soon have a on-site capacity building in Nigeria, so focusing on agribusiness. So please also to share this information with you and your network will be great.
Thank you. We will.
I see Elizabeth. Elizabeth, you have your hands up. I'll pass it over to you.
Okay, good afternoon, everyone. I'm Elizabeth Wadjuwanko. The company that I work with is Oklambest Limited, and we're a member of SheTrades. We started as an exporting company from the Gambia, and we are based in Nigeria more now with agricultural products and other items. I want to ask, what will be the term of the loan, supposing we want to take the trading loan, because that's what you're saying. You don't want anything that is going to be tied. So is it 3 months, 6 months? What is the term of the loan?
Okay. So the term is basically dependent on the purchase order that you have in your production cycle. So as I said, there are some people who are aggregators. There are some people who are actually producers. So if it's someone who is exporting fresh herbs, they already have their farm established, and from getting a purchase order to supply, it takes them 1 month. So we would tie the loan tenor to your transaction. It's not a blanket, oh, it's a 3-month loan. No, no, no. It will have to match your business. But we keep it short term. So it's between 3 months to 6 months. Because anything beyond 6 months, then it gets, you know, we are in Africa. There are currency issues that come in. There are a number of other things that can get introduced. But fundamentally, we all know that trade is fast. 3 to 6 months is the time that it takes to sort of turn around. And so that's what we stick to. But it's not a blanket, it's not a blanket tenor. We basically tailor it to your specific transaction. We have an exporter out of I believe, is it Kenya or Uganda? He does herbs, fresh herbs. And what he does is, even though it is 1 month loan, he basically is turning around that money every 2 weeks because of, oh no, once a week, because he supplies once a week. So we actually give him a loan for, even though it's supposed to be a month loan, we give him for more than the 30 days. I think it's about 45 days. And he turns that loan, that money around, round and round and round, and he's able to run his business. So we are flexible in that regard.
Okay, let me put it across to you. I'm into shea butter. I do other products. I started with food trading before I went into aggregating with the women, producing from north to the end. So I have a women in shea export.
Nice.
Area, though we do food when we have, because we've been in it for almost 20 years now. So we already have a range of people that we supply their own shop in Western countries. But let's focus on the shea butter and black soap, which we have to do the production as well, and we have purchase order already. And we need money to finance it. For UK, for buyer that we have been working with, and we have a good relationship for almost 10 years now.
Okay.
Yeah.
So you can apply on the website. You can. I encourage you to go onto the website and apply. What country are you based in?
Nigeria.
Oh, please go onto the website and apply. It's okay.
It's okay.
Yeah,
thank you.
because that is, those are the sorts of things that there is the opportunity to finance. You have the business, you have the track record. Yes, you have a purchase order. That's a straightforward one.
Okay. We'll look at your criteria because
I
hope you are not going to do like the normal banks that will ask us to bring.
The best. when you apply, you put your information there. We'll reach out to you. So it's not as if we've abandoned you. Whatever challenges you have, we'll talk through it. And as I said to you, we will let you know. Sometimes it's not necessarily a no, it's a not right now, or can you provide us with this? So the goal is to grow with you, to grow and see if it's maybe one PO doesn't work out, we can engage. There's a team that was exporting soybean cake. They reached out to us last, I think it was August. They hadn't done enough transactions. We said, okay, go back and do XYZ. They reached out to us last month. They had gone and done XYZ. They'd fixed all the challenges. They've gone through it, and we're financing them. We're funding them. So we want good businesses that we can grow with. Our goal really is to support the trade business. It's not, we're a financial institution that essentially, if we don't lend, we don't have anything to do with our money. So our goal is actually to give you money so that you can grow.
Okay, I'm great too. That's okay. Yeah.
I can see that you'll be receiving many applications for interesting entrepreneurs that are seeking for trade finance, which is amazing. And that's the whole point.
So what is the percentage for that 6 months? What is the interest rate you are looking at?
So the interest rate is a range. It's between 3 to 6.
What would be the interest rate?
It's between 3 to 6% per month, but I can't say your specific interest rate until I know the nuances of your business. If you are doing fresh herbs, your interest rate will be different from if you are doing shea butter. So I need to look at your numbers, your margins, your unit economics to understand the cost involved, to understand the risk involved, how long it takes you.
Okay. No. Thank you.
Thank you too.
And I think it's almost time to close our very exciting webinar. Thanks so much, Kuorkor, for this very amazing webinar. I can see a lot of interested and a lot of thank you going through all the chat. So I can only say what's next for all of you that are interested. For more information about upcoming e-coffee sessions, for more information to get actually access to this recording and others for other capital providers, I'm letting you here register now on SheTrades.com. For those interested actually in trade finance and in Fluna services, here is, let me put as well once again, on how to apply, the link to apply for Fluna. If you are registered on the SheTrades Invest, you will be able also to access all this information, criteria, and the direct link, also connect with them. So all the information is here for you to benefit from it. And I wouldn't like to close it before maybe Kuorkor, I don't know if you want to say any final remark before we close this this webinar.
Yes. I just want to encourage everyone. I know this is a SheTrades event. I believe that there are resources available to women to actually grow their businesses. Don't listen to what everybody says that there's no financing, there's no funding, whether it is capacity building or the actual funding. Things are available. Reach out to the resources and find out. And I really encourage you to grow your businesses because, as we have seen, it's the women who are the engines of production and the engines of trade. So we really are interested in having more women apply, and we will love to engage with you. Thank you so much for your time. And I'm so excited to be able to do this with SheTrades because the capacity building that they provide is excellent. And I think that more people should take advantage of the platform, of their website, and learn so much from there. Thank you, Elizabeth.
Thank you, Kuorkor, and thanks to everyone that joined us today. It was an amazing session. I wish you all an awesome day. Take care and see you on the upcoming e-coffee sessions. Thank you.
Thank you.
Thank you.
Thank you all.
Thank you. Really appreciate
Thank you so much. We appreciate.
Yeah, thank you all from Bangladesh.